Morning traders, and this is your Dow Jones day trade setup for today. So we ended up with a green, pretty much an indecision bar. We could argue it's a pin bar, but with that long tail to the upside, that's more of an indecision bar in my books. And it is off a level. That's the level there. And you can see we've rejected it twice. So I would need to see a break above the tail here on the daily, or the daily close above that, for me to convince we're heading up. And you can see at the moment we're really moving to the downside. So this is kind of typical price action for after house trade at the moment. So typically if the Dow was green the day before, then the Asian session drives it down, and then when US and Europe open, it either continues a bit and then buyers step in. And the converse is true as well. So when it's moving down, then it sort of gaps up for another move to the downside later. So I think the confusion is going to continue, and if we look at the lower time frames, you'll see this level that we're at the moment is fairly significant. There's quite a bit of attempts at this level, and you can see we've been flirting with it for quite some time. But the important thing here is look at the moving averages. They are pointing down. This trend is down at the moment, and I am still of the opinion that this is a double top. These are all the tests, and I would expect to see a move down to this area here of 19,720. So the jobs number yesterday was atrocious as well. So that was forecasted 3 million, came out of 6 million, and that was this pin bar here. So unless that's priced into the market, which could very well be that they've already priced that into the market, and it's not too much of a concern to people at the moment, but at my books at the moment, this trend is down, and I don't want to be looking for longs right now. So looking at the hour, you can see we had a good rejection of 200 EMA, and we've done that 3 times now. One thing that has also transpired this morning is that initial trend line is broken. And you can see this current hour bar is breaking to the downside. However, the Williams percentage R, look at the diversions here. So high, higher high, high, higher high, and now look at it. Okay, so that is continuation diversions in the direction it was going, and it was going up. So I'd be very cautious right now. So I think you probably find some kind of a trap here where the bears are in, the bulls are waiting for an entry. Where they're waiting, I do not know. Could be down at this 2100. Could very well be a 2100. But there's nothing else that I can see that's going to allow us to get in on that. So yesterday's volatility, you can see there's a jobs number there. So jobs number comes out, and you immediately reverse that back to the top. Okay, so I don't think we're going to get that kind of volatility today, but I think this drifting lower is probably going to continue until at least the European Open. And everything is pointing to looking for a move to the upside. The other thing that we need to just take cognizance of here is a Fibonacci retracement, and we're coming up to 61.8. Well, we're pretty much almost there, and there is a swing low here, so there is quite a bit of interaction here. So we'll have to wait and see what transpires. So my advice today is, again, get onto the lower time frames, and just go with the flow. You can see here this morning would have been a relatively good scalp to the downside, and it's still flying to the downside right now. It's about 100 odd points, but yeah, I don't like trading this time in the morning, so we'll just wait and see what transpires during the European Open. Okay, so yeah, I think the current trend, if we look at the hour, there isn't really a trend in place at the moment. We could argue that we've got a crossover here, but I want to see a pullback, test that crossover, reject it, and then confirm the move to the downside. There's just too much volatility from yesterday, and the day before, actually, if you look at it. So yeah, so for me, I think it's a case of just be patient, wait for some structure, and what you could find here is that we are pretty much ranging here, and we slap bang in the middle of the range again. So we're going to need a break above or below those two levels there. So a break above 21,454, or a proper break below 2755. I mean, that's pretty much going to be the crunch of it. So I think anything down here in the 20,750 area is an opportunity to buy, as far as I'm concerned. And your target's going to be the top of the range again. I think that's where we're going to stay for the rest of the week. Well, for today. And I just want to close off with the weekly. We did get a pretty bullish weekly bar here, but look at what we've got at the moment. It's not quite bullish at all, and it is also a rejection of this breakout. So the second week in a row rejection could be seen as a tweezer top as well. And if you look at the monthly, we didn't get we got a little bit of a monthly close below the monthly breakout. Okay, so yeah, as far as I'm concerned, range break, it's a range, trade the range as it is. Don't try and second guess this thing. We're in a bigger range. Wait for the opportunity. As soon as you start seeing some structure, you want to get in with to trade with the trend. Well, trade back to the top of the range. Okay, so guys, hope it helps, and we'll catch you later. Cheers for now.